Captain, how's your night going? Hello, hello. What's going on, man?
What's up? How are you?
Good, doing good. Felt good to get that nice dub today. I've had a rough week and a half, so
Or,
despite it being extremely slow, it was a nice clean play. So I'm satisfied with today's action and happy I bugged out early. So I'm
yeah,
feeling
yeah.
good. How about you, man? You traded all today?
I'm kind of just holding some really right now. I didn't take any new trades. Just kind of sitting on what I got, just waiting for this,
Nice.
whatever is going to happen at end of this week, start of next week, see where we go, think we are.
Feel that. Feel that. Yeah, I I like to think, that this time of year is just easy upside, but with volatility where it is, it's always a lower kind of volume time of year, so it can be difficult for sure. But
Right.
I do think after we get that minor correction out of the way that Mo's been calling for, we should get a little bit easier action. But yeah, this week, as for tomorrow, like I'll probably alert one or two trades, but I fully plan on taking Friday off, and just kind of
Yeah.
just taking a long weekend and coming back into the next week super fresh with, you know, nothing to worry about over the weekend. I was talking to someone else in chat today who has been struggling as well, and I was letting them know. I was like, hey, it's FOMC, Thanksgiving, and VIX is at practically zero, so this is a great week to sit out, if anything.
Yeah. Yeah. Yeah.
What's going on, Magic? How's your night going? Mr. Panda, you there? No, nothing. Okay, well, um, we can get right into it. We don't have to wait for anyone to show up. I'm sure if anyone wants to show up, they'll stop on in. I know it's a little bit odd because we usually host our sessions on Thursday, and it's also kind of a traveling week, so I'm kind of expecting this session to be a little bit lower attendance, but that's no problem. If anything, just means more attention for you guys. So if you guys got anything you want to check out, just let me know. Otherwise, we can kind of just jump right into a futures analysis, kind of go over where market's at, or we can just look for we can go over my planned plays that I'm looking at for tomorrow. Anything you guys want to look at?
How many specific tickers, like the idea you got, right?
Looking over futures.
Yeah.
Yeah. Um, so today, a little bit of a pullback day. We got ahead of ourselves on Monday. And today we kind of gave a little bit back, but if anything, we bought it back into the close. That morning sell-off was pretty much eaten up, and we're still kind of keeping this uptrend alive. Buyers are still extremely present up here. As soon as we dipped it under 4,500 this morning, we began that slow crawl back up. Right? You can see this is the long we caught. This is where we entered calls this morning, right? We sat through a little bit of bullshit before they really started to work for us. Um, but yeah, we basically got this capitulation move and immediately buyers were present, right? And we had only faded what 0.3% overnight, right? So it really wasn't much of a dip at all. Um, it was really just, if anything, I like to think that it was just the retest of this breakout, right? If you look, this 40 level was the big spot. It's where we had rejected, I don't know, three times, one, two, three times before breaking out, right? And this was the established range beforehand. So today we got that retest of 40 and buyers were present to buy it back up. Granted, we didn't get very far before, we're already kind of fading it back down, and I honestly wouldn't be surprised to see 40 give way tomorrow and we see a nice downside move. So um I think downside for tomorrow is probably confident. I just want to see weakness under this 40 level, right? And we should be able to get a clean move. My targets at downside would be 30, 20 and maybe as low as 4,500, but my main two targets would just be 30 and 20 here. I wouldn't expect much more than that unless we see VIX make some crazy move, right? Or some event happens that spikes volatility. But if we are to see some downside tomorrow, if we see weakness under this 40 spot, again, I like 10 to 20 points lower, right? Just looking for this area, these two spots, 30 and 20. That's it. But bigger picture, I mean, so long as we're over 4,500, there's really no reason at all to be expecting bigger downside. I know Huji and Mo are thinking we see about 150 points lower before buyers step in. 150 points lower from here would put us all the way back down at 4,500. It would completely negate the CPI move. I personally don't think it's going to be that big. I personally think I think we maybe only dip it under 4,500 a little bit before it gets bought back and we continue this trend higher. So, it's possible for sure. I think we could definitely see some fear come back into the market and volatility pick up and we get a bigger sell off, but I don't think that's how it's going to go. I think one swift move into 4,500 maybe holds down there, and then the next day we wick under it and it gets bought back, and that's the bottom before we head higher. So I do think risk reward favors shorts for the immediate short term. Over the next couple days, I do think downside is favorable, but I don't think it's going to be long lasting, right? Just like how we saw here, right? I remember these charting sessions saying, risk reward favors shorts, but I don't think it's going to be long lived, right? I remember this day was a Thursday, right? This was a Thursday and we hosted charting. And I told you guys, I said I wouldn't be surprised if today was the only selling we got. I didn't expect the next day to be as big as it was, but sure enough, we bought it all right back and then some. So I wouldn't be surprised if we see a similar move where this pulls back, tests 50, and that's it, and we continue higher. So that's pretty much what I'm thinking on futures. Typically, when we see VIX as low as it is, right, you typically see moves like this, right? VIX usually doesn't immediately go flying off of 30, right? We'll see something like this, right? So you see how the last couple weeks we've just been trending into 13. I think we'll see something like this where we get a couple days of sell-off, but it's really meaningless. And all that does is give room for VIX to continue heading lower. So I think we will see something very similar to this action, right? Where we'll see a couple days of selling that'll look like this on VIX, but then it'll pop right back down. And these few days will be the excuse for futures to head higher. Does that make sense? That's kind of what I'm expecting. But yeah, short term, I'm looking for downside. I mean, I know my planned plays are all bullish. That's just because the general trend is bullish, and with VIX this low, I'm sure you guys have heard me say it a million times. But when VIX is this low and futures aren't moving a ton, typically individual names are much freer or are much more free to move more independently, right? And so if market pulls back 0.5% tomorrow, that's not a huge move and that's not enough to really spike volatility. So you'll still have plenty of names still have a nice green day, you know? So, my DDOG setup, my Coinbase setup, those are two plays where if market did pull back 0.5% or 0.4% without any major spike in volatility, those planned plays can still work out just fine. But that's kind of what I'm expecting. One setup I do want to check back in on. I haven't looked at them since they dropped the earnings, but they're still dancing around 493. This is an interesting one. This area right here has been defended. This 492, 493 area has been defended over the last couple days, right? Every time they dipped it under, we got it bought back, and same thing yesterday morning and today even this morning. And clear as day, you can see this is the level that we're defending now after hours is this 492 spot. So if you are looking for weakness into tomorrow, this could be a super clean break level. I think the earnings call is going to be starting here in about 20 minutes. So this could be in a completely different spot. This thing could end up breaking down back into 80, or it could rip all the way back up to 510, before tomorrow's open. So I might just be talking out of my ass before the earnings call. But Yeah, I'm definitely going to be keeping an eye on Nvidia. These are some of my favorite plays, these post earnings plays, right? You've got a little bit more conviction in the sentiment, and on top of that, volatility or volume is extremely high. So, for example, uh, the earnings report was killer. I mean, for their valuation, one might say otherwise, right? Some may say, okay, their earnings don't accurately represent what the company should be worth. But all things considered, right? They beat earnings per share by over 20%, and their sales growth is up 200% year over year. No matter how you flip it, that's an incredible earnings. That's a great earnings. The company's growing like, like weed. So it's a good earnings report. And frankly, I think people don't really care about valuation right now so much as they did pre-COVID. And I think there's still a great chance that when retail gets their hands on this tomorrow, we can surely see an extension move higher. And I think with that post earnings volume, this can give us a really quality play. And so I've highlighted this 500 area, right? After the last earnings, this is where we rejected and got some trouble, retested it, couldn't find strength. And, the gap up on what was that, on Wednesday last week was shut down pretty hard, and then we've been struggling with it over the past couple days. So I'm just looking at 500. If we can see some strength over 500 tomorrow morning, I'd honestly be expecting this thing to give us a pretty sizable move up. I think it could be a lot of fun, and it could be a solid play to kind of close our week with. So this is one I'll be keeping an eye on, and these contracts mean nothing, right? Like these prices are going to be completely different in the morning, right? When this thing gets absolutely IV crushed because it didn't go anywhere, these contracts are gonna be really cheap. And I think we could like snag some of these 515 calls. They're pretty deep out of the money, but like on a day like this where it's post earnings volume and it's just gonna trend in one direction most likely, these contracts I would guess are probably gonna be worth 150, if not like $200 in the morning. And if they get towards the money by end of day with 2 whole days of time premium left on them, they could easily be worth like 8 or 900. So, these 515, 510 calls are probably what I'm going to be watching in the morning. And again, they're not going to be priced anywhere near this. They're not going to be worth $1,300 in the morning. Literally 2 minutes after the bell, they're going to be worth like 200, $300. And that's assuming we open up right here where we are, right? We close the day at 499. We're at 493. So, if that's the case, these contracts are going to lose a lot of value really quickly. But,
I
what's up?
have a question pertaining like contract prices at market open.
Yeah.
Obviously, as soon as market opens, I mean prices are all over the place. Um, for I guess a big name like Nvidia, how long would you say for that price like it's into? I don't know about like its fair value, but it's fair. Like I don't know. Do you know what I'm trying to say?
Intrinsic value. Is that what you mean?
Kind of, but more so um like let's say you take a smaller name, right, and that option contract opens and the spread is like 100 points wide, like 100, right, like $100
Yeah.
wide.
Well, that's a liquidity.
Like a smaller wide.
That's just a liquidity issue. On Nvidia, where people constantly are having their eyes on it, and there's a million other people looking to play it, it's gonna have tight spreads. It doesn't matter how much it moves in a given day. It just matters about the volume on the contracts and the liquidity, right? So something like,
Right.
I don't know. Let me think of something real quick. Like, what's something that not a lot of people play with options? ASML. ASML, right? Like these contracts, people don't play them with options a lot, right? And so you can see the spreads. Like, look at the volume. The volume, only 190 of these contracts were done today. And you can see there's practically like like an 8% spread here, right? And if you go even out of the money where volume is a little bit less, right, it gets even worse. 150 to 115, that's like what's the math on that? 35. That's like almost a 20% spread right here, right? So it just has to do with volume. It just matters, you know, it's all about just supply and demand with these contracts, right? there's no middleman that's willing to kind of, pay more than 105 or less than 105, and there's nobody who's willing to sell for less than or for more than 75, right? So there's just a lack of a middleman. But it just has to do with
Right.
liquidity. And so, frankly, if you're playing options on like these names, you should probably just stick to the Nvidias, right? And the only reason these spread is just because, you know, the 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 earnings IV is
Right.
unmatched on Nvidia. So this is a bad day to use this as an example. But let's take like Tesla, right? Tesla has so much volume at any given time, right? That look at these spreads, 183,000 contracts were exchanged today. Like that's about as good as you can get. There's so much liquidity in this. But that's all that boils down to is, it just matters the name that you're playing, right? The more
Right.
liquidity your name has, the tighter the spreads are going to be.
Right. So let's say you want to pick up calls tomorrow after Nvidia, if like pre-market looks good. Are you buying them right at 6:31? Or are you waiting?
That's where, okay, so this is what I was kind of worried about when you were asking that question, is it's definitely case by case. For example, right, these contracts still have 2 days of time value on them, or 3 days, Wednesday, Thursday, and Friday. Even though Thursday's an off day, it can still gap up between Wednesday and Friday, right? So there's basically only 2 days of time value on these. But the reason why these contracts, right, these 515s, for example, even though they're $15 out of the money at close, the reason why they're so expensive is because earnings bring on expectations of a large move, right? If
Right.
earning Nvidia can move $50, $100 in either direction off of earnings. And so people are more than willing to pay an increased premium for out of the money contracts because there's an expectation of a large move. Well, the reason I said these contracts are going to be so cheap in the morning, even though I expect there can still be a good move, it's because since we stayed basically flat, we're down. I don't know. Does anyone have the expected move? Does anyone know what the expected move was for Nvidia? I'm pretty sure we could find it if we look hard enough. But if I were to guess, the expected move was probably like $30 or $40. It was probably like $35. And so because this thing has only moved, what are we at? 92. We've moved $7 since the earnings. All those expectations of of a large move are gone, right? And so both sides, if you played at the money contracts on either side, these things are going to get crushed in the morning, right? Because people are going to be liquidating as fast as they can because the contracts just aren't worth that. The expectations are not the same. And so people are no longer willing to pay that high premium for short dated contracts simply because the expectations of a large move are gone. And so essentially, they liquidate extremely fast and they will. So that's where a little bit of you know, intuition is going to come in the morning, right? Um, the decay on the contracts will be exponential. So, for example, take these contracts. Let's assume that Nvidia is going to open up at 490, right? And it's going to stay at 490 for 30 minutes. It will not. I promise you it won't. It's going to move tomorrow morning. But just for the sake of the explanation here, let's assume that Nvidia is going to open at 490 and it's going to stay flat for 30 minutes. In that first 5 minutes, these contracts are going to lose probably 60% of their value in the first 5 minutes. The 5 minutes after that, they're probably going to lose another 20 to 30%. And then the next 5 minutes after that, they're going to lose maybe only 10%. And then the next 15 minutes after that, they're going to lose another 5 to 10%. Right. And so the immediate liquidation causes the decay to be exponential to the downside, right? Does that make sense?
Right.
Because
Yeah,
pe-
it does.
because people are rushing to get out of these contracts, and there's still a few people, right, who are holding on, thinking, "Oh, it can still do it. It can still do it. I shouldn't liquidate yet." But as time goes on and the move becomes less and less and less likely, more and more people realize
Right.
and get out, right? So it's gonna be really fast and it will slow down. But let's say the first 5 minutes or the first 10 minutes is a dip, and then it starts getting bought back up. These contracts won't go through that full decay period of 30 minutes like we said, right? It'll take, you might have to overpay a little bit for them. But if it ends up bouncing and heading to 510 or 515 like we talked about, you might not get the best entry. You might have to overpay, but you'll only be overpaying for maybe 20 or 30 minutes before the full move of what you were looking for has been made. It's really hard to just talk about with words without, a real-time example. Um, I've been watching these post-earnings names for years now, and I've gotten very comfortable with how they happen and watching premiums during that first 30 minutes following an earnings. And it can go both ways. Like for example, if, you know, um, let's take 510, right? These same contracts. Nvidia closed at 500 just to make things even. These contracts have an intrinsic value of 0. They're out of the money. They're worth nothing, right? But because the premium is $13, people are pricing in a $23 move. Because for these contracts to have the intrinsic value of 13 bucks, we would need to be $13 over 510. So Nvidia, for these contracts to make any money, would have to move over 523. That makes sense?
Yeah.
So let's say, Nvidia moved to 540, right? Putting these contracts 30 bucks in the money. With 2 days worth of time value and being 30 bucks in the money, these contracts would go from 1300 to 3000 plus whatever time value they assess with 2 days of extra time value. So they might be worth 3200 or 3400 or whatever, right? So I've seen it go both ways, but when the stock moves, like, because these contracts were pricing in a $23 move. We moved only $8 and in the wrong direction, right? So these contracts are going to liquidate extremely fast in the morning. So fast. In fact, I want, if you're up early and you're open at the bell, right? I want you to look at these contracts, these 510s, and just watch how fast they drop. You don't got to play it. In fact, I wouldn't suggest playing it because depending on where we open, we might be looking at different contracts anyways, like the 500s or something if we want to take a play. But I want you to look at these, and this is how you'll get a more firm understanding of an IV crush. If you want to do a YouTube video, again, it's very hard to kind of go over this topic just using words. Um, if anything, I learned kind of the hard way when I first got into options trading. I would play earnings plays all the time, right? I would have been the dumbass buying this contract, just for it to open up $7 lower instead, and I would have taken a, $1,000 or $1,100 loss on this contract first thing in the morning, right? And so, I learned through trial of fire, but you guys hopefully don't have to. And I hope none of you guys are in any Nvidia contracts because it doesn't matter if you got puts. If you got 480 puts or 470 puts, I'm sorry, but if we open up at 492 tomorrow, you're going to take a big old loss. Even though you were right about the direction of the move, right? It doesn't matter. That's just how anticipated these contracts were. And simply for the fact that we didn't get a big enough move to cover the expected move in the IV on these contracts, everybody loses. Everybody who bought any contract today is going to take a loss tomorrow morning. Unless this thing just rockets to 440 or 430 tomorrow morning and you hold your contracts through the IV crush in the morning, right? So it's unfortunate, right, that they just didn't get the move that they were expecting. But I promise you, if you open up your option chain tomorrow and you look at these contracts, I'm willing to bet they'll be worth $300, if not less than 5 minutes into the day. It's going to happen extremely quick. Because guess what? As soon as they saw the move, and probably as we speak, people are setting market orders to sell this thing at open. No one in their right mind is sitting here thinking, oh, I'm going to set a market order to buy this contract at open. Everyone who holds this contract, there's probably 12,000 orders right now with a limit order or a market order to sell this, meaning we don't care what we get. Just liquidate me as fast as possible. But yeah, that's pretty much, you might have to take a chance. Like for example, I'm not going to be the guy buying the dip tomorrow. As per my planned play, I want to see strength over 500 for me to get long. And hopefully it happens as late as 30 minutes after the bell so that these contracts have, you know, repriced to themselves. Does that make sense?
Right. Yeah, yeah,
But that's an IV crush. And I was gonna say, if you guys want to learn more about this topic, again, this is the third or fourth time I'll be saying it, but it's very hard to kind of cover this with just words. I would definitely just YouTube real quick, just what is an IV crush, right? And they'll pretty much tell you exactly what I just did, but they may be able to also provide, a recording of of an Apple earnings or something the day after, right? So it's definitely beneficial, and I think it's a very hard lesson to learn if you're playing earnings plays. But you definitely need to be aware of it if you are taking the risk on swinging options through earnings. Oh, well, that was fun. I think that was some good info, and it was a good topic to cover, especially with a name as anticipated as Nvidia. I see a handful more people joined. Glad to see you guys stopping by. Mr. Prime, how's your night going? Plan anything? Sure, for sure. John Deere. Man, this thing. Oh, what's up? Okay. Oh, it's earnings. Well, yeah, so I'll be honest with you, man. Um, Nothing I am gonna say right now is gonna really matter because they've got earnings, you know? Um, from a purely technical perspective, right? Let's look at this 385 level. This 385 level for the last 3 years has been an extremely important spot, right? It's been rejected so many times, and based on all the bounces that we've done down here, right, you can clearly see, um, you know, our primary fair value on this chart is from about 390 down to I'd say 345, right? And so you're pressing up into the top of this volume shelf. It's very, very hard for me to believe that they're going to get back over this anytime in the short term unless this earnings is absolutely killer and it gaps them up into the 400 area or so, right? But otherwise, there's a reason why we've rejected 385, three times over the past month. It's because this is the top of that volume shelf and we have fallen back into this fair value range, right? And so any pop into 390, you're going to need some sort of fundamental catalyst or some overwhelming positive market sentiment to get this thing back over this 385 to 390 area. So, again, what I'm about to say means nothing to you because they've got earnings. I would say the best risk to reward here is still shorts. If you want to short 385 and risk maybe $5, I think your risk to reward here is, if we draw it out, your risk to reward is you're risking $5 to make possibly, you know, 15 to maybe even 25, right? You're
contract.
well, just on the underlying, not necessarily per contract. It matters how much time you're willing to buy on the contracts. But yeah, I think if you wanted to risk shorts here, from a technical perspective only, you're risking about $5 to make 15 to 25 bucks on the underlying. And that's risking shorts. But again, I wouldn't play that because it's earnings. Or they could have the best quarter of their life and we have no clue and you could totally get screwed. So honestly, I think it's best that you just sit it out and wait, you know? Especially is that earnings tomorrow or yeah, that earnings is tomorrow.
You wait until it's already hours. Wait. Want to switch where the trend is going. You know, yeah. Because I always go in at later in the day. I don't ever rush in.
Yeah.
It's way too many times.
Yeah. Yeah, I think again from a technical perspective, I like the idea of risking shorts here, right? I think it's great risk reward for shorts, and you've got some technical factors that I agree with here. But
What was Gary doing for the last couple days?
it's just been kind of bouncing around. It saw a run up with the market here over the last couple of days, and again it got stopped in its tracks here at 385. It's tested it twice in the past 2 days, and yeah, they haven't been liking it. They haven't been liking that 385 level. It's a big spot. It's a huge spot on the chart, right? If you look back, we've rejected it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, and it's been bounced. They've bounced it 1, 2, 3, 4, 5, 6 times. They've bounced it 6 times and they've rejected it 9 or 10. So it's a major point of inflection on the chart. It's massive. Well, I mean, it depends how you it depends how you value a company, whether it's on free cash flow or it's a dividend discount model. There's a lot of ways to value a company. Um, I think the easiest way is just doing a PE ratio because that's what the majority of large institutions are using. I mean, if you used a dividend discount model on this thing, it would tell you the valuation is like 30 bucks. And obviously that's not you're never going to get 30 bucks, right? If you again, that's just an estimate. I don't know what the dividend discount model is telling you on this, but if you did it based on free cash flow, it's going to tell you it's probably half the price of what it currently is. Again, I don't know their free cash flow off the top of my head, but if you use a valuation model that is institutionally sound, there's not a stock in the market that's going to seem fair value. I'm sorry. Instead, what you should do is you should use a PE ratio and compare it to other industry names, right? So I'm gonna be honest, I don't really know a lot of competitors to John Deere. Would you say Caterpillar is one of them, right? Yeah, it could be. Yeah, yeah, Caterpillar or maybe there's another one. I just saw an ad for it when I was watching football this weekend. I swear to God, there's another tractor type company that's kind of making the rounds. But anyways, the safest valuation method right now is likely just doing an industrial or an industry comparison of the price to earnings ratio. Again, and that's probably going to seem overvalued as well because if you want to sell a private company, you'd be lucky to get 4 times, yearly revenue, right? So for example, if your company makes 100K a year in revenues, not profit, revenues, you could likely sell that business for about 400K, right? And that would be a decent, fair private company sale. But for public companies, there's just so much pricing in of future earnings and dividends and growth that it's very difficult to say what is a fair valuation. And there's so many valuation methods that you really just have to kind of, if the company is profitable long term and they are sustaining growth, the best thing to do is just buy a significant dip. You know what I mean? That's about as good as it's going to get. There's no reason to overcomplicate it. Now, if something
Right?
yeah, and I'll be honest with you, John Deere's PE ratio isn't, it's not as high as I would have expected it to be. 12 seems really low. Their 15-year average is about, or their 5-year average is about 17 and a half, but 12.5, 12.6 doesn't seem too outlandish to me. I think that still seems pretty fair. I've got some John Deere equity in my portfolio. I've got a pretty good price on it, but I'd be lying to you if I said, hey, if it comes down to 340, 330 again, I'd still be a buyer. I'd probably still try to pick up more, right? And at that price, it would probably still have a PE of 10 and a half or 11, so if anything, with public companies, it's very difficult to figure out what is a fair valuation because, if you use all the valuation methods in the book, no public company is going to be anywhere near a fair value. Again, you can use a book value method, you can use a free cash flow method, you can use a dividend discount model. There's so many ways to find a valuation of a company, but it's just please tell me if any of you guys are able to run. Well, yeah, I trust me. Hey, if you guys can run a dividend discount model on a stock and find a company that is under that valuation, I will pay you and I will buy as much stock of that company as I can because it just doesn't exist. And if you did, that stock is severely undervalued, you know?
Do you have any
I mean, Nvidia, AMD. Oh, no, I don't own any of AI. I've been watching it, and this thing has been a decent trading name over the last, couple months. I've definitely kept an eye on it. Um, I caught a little bit of this action. I remember one of these bounces I caught. I think it was this bounce. I rode for a little bit, but since then I haven't looked at it, haven't touched it. Why is there? Well, I mean, they're not profitable in the slightest. Just looking at their EPS, they're losing money out the wazoo. I think they only got some hype as of recent just because their ticker is AI. You know, I'm serious. Like, did you know? I read some study like a year or two ago that tickers that have a word in them get on average like 3.5 times daily volume than other names that don't. Like, for example, like cat, AI, low, right? Like those, yeah. Like Roku, like shop, coin, like names like that. They just, for whatever reason, spot, dash, names that like tickers that are an actual word. They receive an unusual amount of volume that doesn't match like, you know, other industry names. But anyways, yeah, I think John Deere's solid, but again, I would just steer clear of, trying to pick a valuation for a stock. If anything, just focus on fundamentals and try to find something that feels and looks solid again. Like most companies that, that do seem overvalued. It sounds funny to say, but that's because so many people have looked at their fundamentals and agree that yeah, this is sound. I mean, with Nvidia being the exception, I can't argue with that. Nvidia's ridiculously overpriced, but um, names like Apple, Microsoft, the reason why those companies are so elevated is they just, hate to say it, but they're almost too big to fail and they're so consistently profitable and still somehow sustaining growth at these valuations or at these, heights. The fact that they're so widespread in the world and they're still managing to grow and find new business ventures, it's insane. So well, you need to. If you want to sustain growth, you need to have the funds to be able to use towards research and development, you know?
they're making money?
Yeah. I mean, I'm sure you guys have heard that iPhone sales are slowing down and it's gotten so much to the point where they've released the first ever iPhone that wasn't more expensive than the last, right? Like that should be a major tell that okay, it's time for them to start, implementing funds into other ventures, whether it be, the next generation of AirPods or some new technology. I heard a long time they were trying to get into the car business. That'll never happen. Frankly, I think Apple's too smart to ever get into cars. It's just not a profitable business. Car businesses are, that just seems like a bad idea. But hey, I'm sure people said the same thing when the iPhone wasn't going to have any buttons on it, you know?
Just cloning the same thing every time.
Yeah, right.
It's the only thing
Yeah.
they're totally rich.
Well, you guys want to get into something else? Anyone else got anything you want to talk about? Let's roll. Nice of you to stop in. How's your day going? Hey, man. Right. Feel that. Oh, you got anything you want to look at? Any general questions? Sweet. Love to hear it, man. Well, if you have anything at all, don't hesitate to chime in. I always say these are discussions, not lectures. So,
Appreciate it.
hell yeah. Anyone else got anything they wanna check out?
What are you thinking about the banks right now, like GS and JPM and like Bank of America, Wells Fargo?
Well, I hate to acknowledge it, but I'll be pretty honest and blunt with you. I don't really care for the banking sector. I haven't been doing my DD, and they don't trade very fun for my style, so I just haven't been too focused on them. I mean, I know that rates being elevated is putting stress on them, and I actually was just talking to a financial advisor today, and he was talking about how there's some major lawsuit about the credit card rates that are being charged on consumers, and there's a decent chance that if it goes to a larger court, that we could see credit card rates come down significantly. That would obviously be another crushing blow to banks, and that would, of course, I'm not trying to predict that, but it's just from what little information I have about banks. Again, from a technical perspective, they've been positive. Some of the big names, Goldman Sachs, Bank of America, I think they're fine long-term holds, and that's about all I'm comfortable saying. I don't think I'm interested in trading them. Nothing's really changed. I don't really like the way that a lot of them move. I prefer the tech names just because they're so much more volatile, and as an options trader, it's just what I prefer is that volatility. Um, if you're a swing trader, there's definitely opportunities there, and if you're a long-term investor, I still think there's some great names, but I just haven't been following the sector as much as I probably should be, and I don't really have a confident answer for you. If anything, I think if there's a name you like, wait for a dip and start accumulating in your long term. Again, I wish I had more for you, but I don't really I haven't been following the banking sector as much as I probably should be over this last 6 months since the liquidity crunch and the the what's the word I'm looking for, the deposit, or the reserves kind of crisis at the beginning of the year. Since that, I just haven't really followed up. That got brushed over so fast with more QE than your mind can comprehend, that we kind of swept that under the rug and handled it swiftly. So, um, who knows? We could see some more banks go under if we see a couple more rate hikes, but it's not at the front of my mind right now, and it's not anything I'm really expecting. So, um, if anything, I think a lot of banks have gotten hit pretty hard this year, and they're kind of following through with that 2022 weakness that the general market saw, and they're still pretty low in terms of valuation. Um, I've got a couple, or I've got some Goldman Sachs equity in my long-term portfolio, and I've got some other finance names, other banking names. But as far as just long-term holds go, I don't really have anything for you. Is there something specific you were looking at, or some name you were looking to trade that you wanted technicals on?
No, just kind of just a general, and just I remember you just putting GS in here. plan plays like a few
Yeah,
months ago.
yeah.
You
Goldman
didn't
Sachs
go.
actually, well, it didn't play through, didn't play out. Market had other plans, but I did like this Goldman Sachs setup. It obviously didn't play through. It didn't work, but I thought that it looked good for a quick push higher into this 445 area. But seems it wants to stay within this fair value range, and it got close enough to the top of this volume taper to where we kind of where sellers started mounting early. So yeah, it's kind of off my chopping block for now. I'll wait for it to set something else up. But of all the banking names, Goldman Sachs is the one that I do consistently find setups on, and will try to play every now and then. In terms of intrinsic value, right? As options traders, we care about actual dollars moved. For in comparison, like if you look at Bank of America, it's a $30 stock, or Wells Fargo, it's a $42 stock. If you compare it purely based on that, Goldman Sachs naturally, since it's a $335 stock, it's gonna be better to play for options, right? Just because that intrinsic value, it's moving much more intrinsically than any other stock, right? The underlying is moving in terms of dollars much more than any other banking name. So if I do find something in the finance sector that I like, I'll probably end up trying to play it with Goldman Sachs. And that's the only reason why. Is just because the dollar value of the equity is higher naturally. If every bank moves 1 or 2% in a day, Goldman Sachs is going to give you the most dollars. So that's it. That's purely it. What's going on, Mo? How's your night going? You enjoying your night? Having some ramen? Ah, he's holding out on me. All right. Well, anyone else got anything they want to look at?
What's up, bro?
What's going on, Mo?
Harry?
Yeah, I can hear you.
Alright. That's good.
You got anything you want to check out, Mo?
Uh, I don't know.
Hell yeah. All right. Well, let's see. You guys want to go over some of the plan? Hmm? I didn't know PRCH was an or was an ETF.
No. I DBA.
DBA.
Yeah.
That's it.
Yeah, they're long like short-term treasuries that good amounts just in like a mutual fund. So I'm thinking over the next year or two, as you know, treasuries come back to and it goes south with equity. Percent of that. Nothing really true.
I was gonna say it doesn't really seem like you to be adding equity up here.
I mean, it's just
You're playing it for the treasuries aspect of it, yeah.
for sure, yeah.
Okay.
Yeah, I think it's percent of it's. It's really says. That's really says. It's like which is my thesis right now. So
Yeah.
it's not gonna happen to that next year.
Well, I will say I got to give you a little credit. I think that lost decade theory is looking more and more likely.
Yep. Yep. Pretty much just going nowhere. So hopefully, I think we actually get a bit more of a dip up in the next year or two. But wait.
I'm just reading about this real quick. Huh. Big commodity name. I'm not seeing anything on treasuries in here.
Right.
I like it. I'll pick some up with you.
Yeah,
What
for sure, man.
what do you weighted in this thing if you don't mind? What do you weighted in this thing if you don't mind?
It's like, see what I wish. Like around 25%.
Oh wow. Okay. All right. You're not are you in cash at all?
That 20%, and then rated shorts 5, about 25%, and then I've got TRCH and check right now still got more like 10, and then I was got a shit ton in different energy names,
Gotcha.
and then the only real stock I'm holding was like for the small amounts of Tesla.
Okay.
I want to.
Hell yeah, man. I like it.
I'm very. You should try it out.
I don't blame you. I've been saying for the last year that, everyone's gotten so excited to see inflation come back down, but I'm gonna be honest, I don't think we see, dare I say ever, but I don't think we see 2% for a long, long time.
Yeah. No, for sure.
I think it's a middle class fallacy, an absolute fantasy.
Yeah. I see they're like coming up others, so. Okay, right.
Yeah. Well, anyways, I appreciate the insight. Like I said, I'll probably pick up a good chunk of this. I'm damn sure won't I damn sure won't wait at 25%, but I'll pick a good chunk up.
Yeah, I mean, I wait things that like big.
Yeah. And this is something you plan on holding for at least a year, 2 years, right?
Yeah, I think
Because you need rates to come down.
I'm looking for at least like 6 months.
Yeah.
We'll see. But yeah.
I can't see a rate cut in the next 6 months. I think a pause. I think we get one more rate hike, dare I say, and then I think we get a 6 to 8 month pause. I feel like if I again, I'm not doubting you. I just think if I think if any rate cuts are on the board, they're late 2024, if not early 2025.
Sure.
Anyways, Anon, how's your night going, man? Saw you were talking about you getting crushed over the last couple of days, man. What's going on? Oh, no camera. Oh, jeez. All right. Okay. Well, does anyone have anything they want to check out? Want to review one or two of the plan plays?
Did you go over coin for your plan place?
Yeah. So coin's definitely a high speculation setup. It's kind of been building some strength out of this kind of balance that it's been in for the last year or so. It's definitely a momentum setup. I liked this 100 breakout, but unfortunately, I wasn't really keeping an eye on it yesterday, and it made the move without me. But I think it's still got room into this 110 area where we kind of built a ceiling the last time we were here. And it just so happens that Bitcoin's been extremely strong over the last couple weeks. So it's really just a momentum play. And I think today, right, despite market dipping, it looks like shit after hours. I'll be completely honest. When I wrote the plan play, it didn't look like this. But I saw that this morning, right, the gap down, we dipped, and they spent the entire day buying it right back and put it right back at yesterday's close, despite the market kind of having a pullback day. So I thought it was showing, some nice resilience, and I was really just thinking, okay, we should be able to see this continue into this 110 area, where we saw it kind of magnet last time and struggle. If it gaps down tomorrow, I'm not really too interested in it because, we can clearly see it's already down a good chunk after hours. So this play might already be voided, just. But if anything, if we do get a dip into the 100 area, that could be a decent spot to try it. But again, it's more banking off of continued Bitcoin strength. So if we wanna look at Bitcoin real quick, they kind of pulled back a little bit today. Looks like they're already kind of getting sold pretty tough today. So this could explain that after our selling on Coinbase. But um, if Bitcoin can magnet itself up to the 40,000 level here over the next couple days or weeks, I do think Coinbase can still be a nice swing trade. I don't think, just looking at it now and looking where Bitcoin's at, I don't think we're going to get to play this tomorrow just because it looks like we're getting kind of a pullback here and that momentum's getting stopped a little bit. But if you're willing to try it, maybe grab 2 weeks worth of time, dip under 100 could be a nice snag. And again, super high speculation. It's not much of a confidence setup. Again, I don't really like buying stuff for upside when it looks like this. But again, it's really just more of a momentum sort of speculation play. And I was expecting this 110 area to get kind of tested before we see risk to reward flip back to more confidently with shorts. Um, Again, I really liked this setup. This 100 break was super clean, and I wish we had caught it yesterday, but it just wasn't on my radar. Um, yeah, it's kind of a little bit of a wash. I wish Bitcoin was looking good because these momentum plays are fun, and Coinbase contracts are typically pretty liquid. These are super nice, and these prices are attractive. So just for example, if we were to catch these 105 calls, right, these contracts tomorrow, these are going to be down at open, right? This was the closing price of these contracts, and at close they were at the money, if not in the money. So if you do the math, at the money contracts will still probably be worth about this tomorrow. But if you catch a decent move, from 106 to 10 to 110, these contracts would be worth, $500 of intrinsic. So it's a very clean setup, and the premium moves really well. So um, it's a fun name to trade when it's moving, but when Bitcoin's not doing so well, it's really just a hard name to trade. So we'll keep an eye on it. I don't think we're gonna get to play it tomorrow, unfortunately. I think it might already have gotten thrown on the back burner with where Bitcoin's moving right now. But yeah, I think before we see a major pullback, we should probably test this 110 level. I mean, it all depends on Bitcoin, but yeah, that was the thesis behind it. Was just it showed some resilience today. The gap down and dip got bought back. We closed super strong, great relative strength, and then on top of that, the name that it's moving with, right? The cryptos. As long as they stay strong, I'd imagine Coinbase is going to stay strong as well. So, I mean, people a lot of the time consider Coinbase like the crypto proxy, right? Like it's the stock or the equity version of a proxy. So, it doesn't really matter that Coinbase is losing a bunch of money and they're still not profitable, but if Bitcoin's doing well, Coinbase tends to do well. If you look at the charts, they tend to trend with each other. So that's really the only thesis behind it. It's not super deep. It was just kind of maybe we can catch a little bit of this momentum with it. And that was really all. But yeah, it's probably on the back burner for tomorrow. If you want to take a chance at some swings, it can definitely be worth it. But just make sure you're getting a sizable dip. Maybe a pop under 100 could be nice to try. But on that note, if no one else has anything, I think we covered a lot of good stuff tonight. Uh, I'm gonna wrap it up here. If not, speak now or forever hold your peace. Again, you guys can always DM me after hours, and I'll do my best to get back to you guys as soon as I can. But this session, along with all others, is recorded and it'll be posted on our YouTube page in the next couple days. And so if you missed it or you showed up late, or you want to watch some of the older sessions, head over to our socials page where our YouTube is linked, and you guys can find this video and all the older sessions uploaded on YouTube. Watch them at your own leisure, rewind them, do anything you gotta do. And if you guys have questions on that material, you can always reach out. But I hope you guys have a great night, and shout out to you guys for showing up. It makes it's very motivating to see you guys showing up and spending that time to work on your own education and get those questions answered. So I Hope you guys have a good Thanksgiving. Of course, I'll see you tomorrow, but in case I don't see you in chat, happy Thanksgiving and enjoy the long weekend. Okay. All right, you guys. You guys have a good night. Later, guys.